Hello and welcome to another session of the Let's Get Technical series. I'm Kavita Agrawal, the founder of EXP-Invest. Today we are here to talk about common pitfalls that traders face, and I will tell you how to work around those pitfalls. See, in this session, we'll talk about everything from a swing trading perspective because I myself am a full time swing trader and I want to do my best to help you become at least as good as a swing trader as I am. So, let's get started. So now this is my screen as you can see. Um, the topic for the day is how to avoid common trading pitfalls. Why are we talking about this? In the world of swing trading, or let's just talk about from a more broader perspective, in the world of trading, people when they start, they make the same mistakes over and over again. If we can just avoid at least the main common trading pitfalls that everybody makes in their trading journey, then you will be able to shorten your learning curve and as a result of it, make progress way faster in the market. So before we begin with the session, I want you to think yourself and tell me in the comment what are the common trading pitfalls that you have personally encountered. Now, what do I mean by pitfalls? The common mistakes or the repeated experiences which you think is happening with you but is not fair, it is not letting you make profit or be successful in the market. Something where you feel really like you're stuck. So tell me about it. What is the pitfall or trading mistake that you are constantly repeating? What is the experience that is not letting you become successful in the market? Now, I want to hear from you what you think we are going to talk about today, and then I'm going to take you through the answers in a very systematic manner. So, Vibhav Nayak has said falling for tips. It is true. One of the reasons why so many people fail at trading is because they don't rely on high quality analysis. Rather, they rely on what they think might be backed by high quality analysis, which is mostly free tips on the internet. Remember, my friends, when it comes to the world of trading, you are acting to make money fast. Nothing in the world is free, and most certainly, idea to make money is definitely not free. So, very good, Vibhav. Do you have any other suggestions or any other ideas about what are the common pitfalls that traders face? Poor exit strategy. So there is a guest who says that the sale is not on time. See, if your exiting is not on time, that's a matter of your practice. I always say my members of the Trade Together program, that if you want to succeed in swing trading, you need to buy the right stock at the right time, at the right price, sell at the right time, at the right price. Most people focus only on the right stock. They don't care about whether they are buying it at the right time or the right price or selling at the right time or right price. If you don't take care of four out of five things, how are you going to become successful? You're gonna not become successful. So, we have SK Jalanji, he's saying buying at high price. So yes, entry and exit at the wrong time will lead to is a very common pitfall due to which most people experience losses. Lack of patience. Yes. Why do we get impatient? Because we don't have a strategy. When you don't know what your next step is, you want to do something, okay? We are beings, we are doers. So if you don't know that you are supposed to wait or how long you're supposed to wait, you're going to do something. And that something in the market is either buy or sell. Over trading is also one of the very common pitfalls that people face. Lack of patience, how to find trailing stop loss, improper use of stop losses, doing wrong analysis. So, wrong analysis can come from ignorance, right? So, great audience, great responses. Now, I want to take you through the notes that I have prepared for you and go through the pitfalls one by one and discuss the workaround for those. So, first, before we begin discussing the pitfalls, we need to discuss the ecosystem. We are in this webinar, at least for the sake of this webinar, limiting our discussion purely to swing trading and momentum trading. So what is swing trading or momentum trading? We understand that the stock market does not move in a single price line. It goes in waves. When we want to capture an upside, we want to enter at the bottom and exit at the top. Again, when the stock comes down, enter, again exit at the top, again it comes down, enter, again exit at the top. In the past, if you look at some of the sessions discussed, Alchem, Ambuja Cement, Nelco, I have demonstrated to you how we've done these trading, where we've identified a major bull trend, and within the bull trend, we've made multiple entries and exit, right? So we are doing it like a business to capture profit more. We are trying to capture profit that is more than the actual uptrend that is unfolded. So suppose a stock has gone up maybe 40% in 120 days, we are trying to make 60% in maybe 70 days by optimizing our entry and exit. This is super skill intensive, requires very high discipline, and also very high level of notes making. In this session, I'm going to touch upon each of those points. We'll not go into a lot of details due to the shortage of time. So we have Kaushal is asking, how do you know what is the right price of any stock? Kaushal, there is a whole discipline dedicated to that study. It's called technical analysis. Right now, I think after medicine, the field of technical analysis is the most abused field, because any random person who can identify head and shoulder is going up on the TV and claiming to be a technical analyst, or going on YouTube and claiming to be a technical analyst and talking to people about it. But that is not correct. And I am personally, as a very ardent student of technical analysis, trying to bust a lot of myths about the field. Technical analysis is truly a science to begin with, but then it's an art at its core, which means once you begin with analyzing, once you begin with understanding and learning few concepts, you need to constantly practice to become better and better. So now we've understood what swing trading versus momentum trading is. You're constantly trying to trade in stocks using your cash. We're not using any kind of leverage. We are not using any kind of margins. We are trying to buy stocks at the low price, sell at the high price with our cash, without any leverage, without any margin, to generate alpha. Alpha means we're trying to beat the market returns, right? What are the key principles of swing trading? There are only two main principles in swing trading that if you can come around applying consistently, you will succeed. One is risk management, one is capital allocation. What I mean by that is there are few rules that you need to follow. For example, on the risk management side, make sure that your risk reward ratio is always minimum 3. You need to make sure that in a single position, your risk is never more than 5%. You need to make sure that your target is minimum 6% when you're trying to enter. When you have these base rules, you will see that of the many million opportunities that are there in the market, suddenly the low quality opportunities don't appeal to you at any point of time. See, even 1% upside is an opportunity, but it's not a high quality opportunity, because you have limited funds. It may be 1 lakh, 10 lakh, or even 1 crore. You want to make sure that you're taking this capital and putting it in the best possible stock at the best possible price at the best time to make the most returns. That you can only do on the basis of very objective, very proper, high quality allocation. To maintain high quality, you need to have certain standards. These rules that I've just told you are your certain standards. The next thing that I told you is capital allocation. So don't keep 50 stocks in your portfolio. It's not going to do anything for you. It's going to dilute your performance. So even if one stock in your portfolio goes up 100%, right? But you have allocated only 1% of your total capital to that stock because you have 100 stocks in the portfolio, the impact on the overall corpus is going to be 0.1%. That is nothing, right? So I always say that maintain around 10 to 15 stocks in your portfolio, and within those 10-15 stocks, have a allocation matrix in which you add stocks only in accordance to the market cap. So if you're adding a large cap stock, allocate maybe 10% to it. For a mid cap stock, maybe 5%. For a small cap, maybe 2%. And if you're tempted for whatever reason to buy a micro or a penny cap, don't allocate more than 1% of your total corpus there. A lot of times I see people having 60 stocks in the portfolio. Boss, what is the stock going to do for you if you're not going to give it enough power to change your life, right? Now we'll talk about some of the common mistakes. Okay, now we are going to jump into the crux of this. So most of the common mistakes have already been mentioned by the members. All right, so there is a very funny comment that I want to expand on and also emphasize, because this is also a common pitfall of members. So Anup ji is saying this is theory and known. Tell something new. See, in trading or in technical analysis, you don't need something new every single day to succeed. You need to stick with what you know, and you need to practice it more and more and more and more and more. If you keep chasing the new thing, this is not fashion, this is a practice. You don't need something new every day. I am succeeding in swing trading with what can be called as the gateway indicators, simple RSI, volume and moving averages. The reason why I'm succeeding is because through the 12 years of my practice, I have stuck with them. And because I am sticking with my analysis, my tools, my indicators, I am able to build on top of it. When you're not building on top, you're spreading yourself out too thin, you will not be able to succeed. So Anup ji, I'm sorry if I'm boring you, but this is what it takes to be successful. You need to be consistent, you need to work with what you have, and you need to have fun doing it over and over and over again. Now, let's talk about the common pitfalls. The first one is emotional discipline. Uh, we have heard about the common emotions of regret and fear in the market, but there are more emotions in the market that get triggered and force you to make wrong decisions. Some of them can be regret. You bought a stock, it went up, you didn't sell, it came back down. What are you going to do? You're not going to sell it, even if it's triggering your stop loss, because you want that high price to come back. Regret. Or you bought a stock, you sold it too soon, and the stock went up. You regret missing out that profit. So you're going to buy it at the high price, but now the stock is going into correction. Regret is one emotion. Then is hope. You bought a stock and the stock went into correction. Now you don't know what your stop loss should be. You can see that you're sitting on unrealized losses, but you're hoping that the stock is going to come back to break even so that you can at least exit and recoup your capital, if not make any profits. Hope should not be the decision maker of your trading decisions. Then there is also one revenge. You get angry when you experience losses and you think that, you know what, today I traded Nifty, I lost money. There is still 1 hour left in the market. I'm sure I can recoup this loss that I have incurred. You get into over trading. You keep executing trades over and over again. Or if you're not even doing options trading in Nifty, in cash segment itself, you keep buying, selling, buying, selling, buying, selling the stock, because at this point of time, your emotions have fogged your vision. You can no longer see what you're doing is harming your portfolio. So first pitfall is the emotion trading. As a new trader in the market, or even as an existing trader, it is a continuous effort to separate your emotions from your trading decisions. I personally, as an experienced and professional trader, I maintain extensive dashboards and extensive trackers and extensive database of my trading records. I never look at my profit and loss. You know why? Because the profit and loss is where the emotions stem from. I don't want to know whether a stock is up 10%, 20%, 30%. I want to know where my next stop loss is going to be. So if a stock is going up, I have set an alert. If the alert gets triggered, I know I need to look at the stock, revise my stop loss. I will go revise my stop loss, update my tracker that my stop loss has been revised. Time and again, I will keep applying filters on the tracker to see whether there is any stock where the stop loss has become more than 5%. If yes, go back on my charts, see whether the stop loss needs to be changed. Go to my trading account, GTT orders, change the GTT orders. At no point of time during the day am I even looking at my holding statement. You, on the other hand, are looking at your profit and loss 20 times a day. How are you going to stay objective? So emotional trading, throw it out of the window. Bring objectivity. Bring systems into your trading so that you stay objective. So, Mr. Jalan, I am not an options trader, and I strongly, strongly, strongly discourage retail traders from options or intraday trading because the whole landscape of options and intraday trading is tilted against you. There are very mature people with a lot of expertise, higher IQ than you, lots of capital and very advanced systems, and a whole team of experts sitting to take your money away from you in options. They have the power, they have the superiority of systems. You can't win a battle there as an individual. Okay. Stick with cash trading, do swing trading or long term investing, grow slow but consistent, and you will get much further than options trading, because in options and intraday trading, huge possibility that you make money for 100 days in a row, but one day you're going to make a loss, and that loss is going to be so big, all your profits are going to get wiped out. This happens with every single option trader, never happens with a cash trader, that in one day they lose the entire year's earnings. So don't do options trading. Lack of a trading plan. What is a trading plan? Before you enter a stock, before you even decide to enter a stock, you should know where your potential target and stop loss is. Basically, have an exit strategy before you make the entry. That's having a trading plan. You need to know what is the exact amount that you're going to allocate to a stock, what is the number of shares you're going to buy, what is the sector of the stock, what is the risk that you need to observe. So in my Trade Together program, when I give my members a stock recommendation, I tell them not just the name of the stock and the buy price. I tell them what their stop loss should be, what their target should be, what their risk reward ratio is, how much risk are they taking even in the ambit of swing trading. Is it a high risk trade, mid risk trade, low risk trade? And I also give a remark in addition to that. Why? Because I want my members to make informed decision. And then when the stock starts moving, I also help them out with revised stop losses. So if that is something that you're also interested in, click the link given by the ET moderator. There's an offer going on which is valid until today. I will tell you about it at the end of this session. Next is over leveraging. When you over leverage, the biggest problem is that what you perceive as a 3% risk on price fluctuation gets converted, gets multiplied by your leverage. So if you're analyzing the charts and if you think that this is 3% leverage on your capital, 3% risk on the trade setup, on your capital it might be 6% risk because you've taken 100% leverage. So over leveraging or using any kind of leverage, we think is going to magnify our rewards, but in reality what it is doing is magnifying your risks. And if you're not super skilled and you're using leverage, you might as well tear up your money or just put it on fire. That'll, I think, give you a little bit more satisfaction than options trading. Is Zerodha account a must for Trade Together program? Sumanji, Zerodha account is not must, but I strongly recommend using Zerodha because from what I have seen, Zerodha is the only broker that gives GTT orders or stop loss overnight stop loss facility on positional trades, which does not expire, right? And also it's super cheap, it's super efficient, the user interface is amazing. I think Zerodha's trading platform is the best trading platform I have ever used. And I trade in cryptos, I trade in the US markets, I have traded with HDFC, ICICI, Axis, Angel One. I have discarded all of them. Zerodha is the ultimate platform. It's the best trading platform in the world. Now I don't know if Korea maybe has one, but based on what I have used, it's the best. Next is ignoring market trends. So this is a very interesting pitfall because what people do is, suppose if you're an intraday trader, you will look only at the 3-minute, 5-minute or 1-minute chart. You don't understand that the trend has multiple levels. There is a concept of fractalism, which means that there is a trend unfolding, say, on the primary wave, which you can observe on the weekly or the monthly time frame. Then within that primary wave, there is wave unfolding one time frame lower, which is observable on the daily time frame. Within that, there is another wave unfolding which is visible on the hourly time frame. Within that, there's another wave unfolding which is visible on the minutes time frame. Within that, there's another wave unfolding which is visible on the tick time frame. So whenever you're taking a trade, you need to make sure that you're getting into a trade which is in the direction of the primary trend. This is also called the concept of eclipsing. Okay, so fractalism is the occurrence of the same pattern within larger patterns or smaller patterns, and eclipsing is looking for the point, the starting point where all the different levels of trends are aligned. When you use the concept of eclipsing to enter a trade, your trading will be the strongest and your risk reward will be the most attractive. Your success rate is going to improve significantly. And again, the low quality opportunities will automatically start dropping out. So, in order to make sure that I am staying with the trend, I use a 6 chart layout, which I have shown thousands of times by now on the Let's Get Technical series, which I do on Wednesday. In that, you will see whenever I start with a new stock analysis, I always start with the largest time frame, which is the monthly time frame. If monthly time frame is too big for the stock, I go down to the weekly time frame. I first mark my trend lines, my horizontal zones to identify important support resistance, and then I start with the analysis. Drawing this trend line on the weekly or the daily time frame with a single slope on the entire chart keeps my charts clean and helps me avoid the biases which come from drawing wrong trend lines on the charts. Then is the poor risk management. Like I said, managing risk in the stock market is your first job. Making profits is not your job at all. It's a byproduct of being a good person in the market. So if you want to succeed in the market, forget about profits. Trust me, don't even think about it. Just think about keeping your losses small. Whenever there is a new prospect and they want to understand what swing trading is, this is the example that I give them. Swing trading is like getting into a car. Once you sit in the car is going to take you to your destination as long as you know your direction and you don't get hit by something or you don't hit something. So as long as you're being risk averse, as long as you're taking care of the risks, you're going to get to your destination. So getting to your destination is not the goal. It's the byproduct of staying safe in the market, doing things the way they should be done, not the way you want to do them. So how do you succeed? Now that you know that there are certain mistakes that you've been doing in your trading process, how do you start doing things in the right manner? First, you develop a trading plan. How do you develop a trading plan? Initially, it is possible that you might have to learn a lot of things. For example, how to identify potential bottoms, how to learn how to set stop losses. See, all of these things are very intensive. They require a lot of iteration, a lot of back and forth. And if you can have the guidance of an expert, then you can learn a lot faster. This is the reason why I run the Advanced Technical Analysis Training Program. If you want information about that, I will suggest you join my Telegram channel. I'm dropping the link in the comment right now for you to click on and join. Right? So you need to develop a trading plan in order to know that, first of all, you should know how much risk you can take per position and on your overall capital. You need to know what your goals are, and then you need to strategize according to it. So for example, if you take my own trading journey, I have decided that I don't want to risk more than 5% of my total allocation to any stock. So if I come across a very attractive stock which is very volatile but has potentially say 30-40 upside, however the risk is also 8-9%, which is a big risk, I'm not comfortable taking that risk. It's not that I'm going to avoid trading in that stock. I will trade in that stock, but then I have a strategy for it. I will make my allocations in such a way that my average cost gets reduced, right? So if I can see that the stock has say a potential 9% downside where it might go, I will set buy orders, GTT overnight buy orders, such that if the stock goes lower and lower, my orders keep getting executed in tranches and I get a lower average cost without having looked at the stock at all for the next 10 days. How do you identify stocks for swing trading? There are 2000 stocks. I love the questions that Mr. SK Jalan is asking. So, Mr. Jalan, I have a stock list. I have a watch list of 100 stocks. I have identified these. I have a strategy for identifying these stocks. I just make sure that these stocks are all fundamentally good. They are not micro cap stocks. They have enough liquidity, right? When you apply these filters to all the 2000 or even 5000 stocks, your the number of stocks that sustain will automatically reduce, and then you can take those stocks and put them in your watch list. Now once you have a watch list of say 100 stocks, within that you just need to do further analysis to identify better opportunities. Now within these 100 stocks, I have a screener that constantly runs, that tells me which are the stocks that I need to look at right now to identify opportunity. Once I've identified the stocks where I need to look for opportunities, I start monitoring them. In my monitoring phase, when I see that it's time to enter, I make a position. When I make a position, I start trailing the stop losses. When my trailing stop loss gets triggered, my position gets exited and I'm in profit. So this entire system allows me to be a much better swing trader than I've ever been in the past 12 years. And this system I have developed in the last 5 years. And now through my advanced technical analysis training program for swing traders, I am handing over this system to anybody who is interested in learning from me. Risk management strategies we've already discussed in details. Continuous education. See, continuous education sounds very heavy. This does not mean that you have to enroll into CMT like me, you have to study CFA like me, or you need to constantly take courses. No, that is all for absorbing new knowledge. Sure, see, I personally enjoy listening to stock market related podcasts. Like, for example, there is a podcast called Fill the Gap by Taylor Wood, which is done by the CMT Association, and it is only for CMT charter holders. So I listen to that podcast regularly. I read books related to technical analysis and the analysis methods of great technical analysts. However, the main education, the value education that I get is from my trade tracker, because in that trade tracker I meticulously manually maintain every single trade that I do, and every 3 months I go back to that trade tracker to study how my executions have performed. Basically, after 3 months of closing a trade, the related emotions to that particular execution have dissolved away. Now I can look at the results objectively, and I can see whether my entry was good or bad versus how the market has unfolded, whether my exit was early or at time with on the market has uploaded. Now if I have say 100 trade data, I can filter all the stocks where maybe I exited too soon, right? LTP divided by exit. So versus the last traded price, where was my exit? Now, if there is a difference of say 10-15%, clearly I entered the stock too soon. Quickly filter out those stocks, study these stocks in bulk. What is the common mistake that is being repeated in this? I have studied it. Now I know what is the mistake that I did. I study the broad market. Okay, this was the market dynamics. The market was bullish but was topping out. Is this the or market was going into correction? So did my stop losses get triggered? I can ask this trade tracker in numerous questions, and the beauty is that this trade tracker is the ultimate teacher. It has all the answers that I need to know, and it is only by asking the right questions that we learn. And when you start manually inputting your trades in a tracker and go back and studying it, it just has this wealth of information that personally applies to you. No personal mentor, trader, teacher can beat that. There is no book in the world greater than your own trade journal or your own trade tracker. So in the Trade Together program that I run, I give all my members a trade tracker developed by me so that they can use. I teach them, I onboard them, personally tell them how they're supposed to use it. And if they need any customization on the trade tracker, I do it for them. Because again, I want as many people to succeed in the world of swing trading with me, through me, and with my help. That's all I want, right? And then using technology wisely. So this trade tracker that I'm talking about, right? It's a simple Google sheet. It's not a fancy software. It's nothing expensive. It's something absolutely free. You just have to make some inputs. Now, why the Google sheet and why not Excel? Because in Google sheet, we get this ability to pull in live market prices from Google Finance. Excel also gives that facility, but it's way more complicated and time taking to set up. So I prefer to use Google Sheets. Also, it's available on cloud. Why not use it? Now, even in EXP-Invest, my company, the services that I give is based on using very basic apps, very basic tools like Telegram channel, so that you don't have to download additional application. A lot of people came to me, said, launch your own app. But I'm like, I don't want to complicate my services. I want to keep it as simple as possible so that more and more people can get onboarded and use it. So these are the strategies, these are the steps that you need to follow. Whew. I have shared everything that I came to share with you. I hope you will connect with me on my Telegram channel. So, if you wish to connect with me and join my Telegram channel, simply go on Telegram and type trade with Kavita, right? You will get directed to my Telegram channel. On this Telegram channel, if you go into media, right, you will see something called the capital allocation guide. This is a guide for rookie with respect to how to do your allocation properly. I know that a lot of people out there do not have a proper strategy for doing good quality capital allocation. This grid can give you a very beginner level guidance. So if you're buying a large cap stock, keep 8 to 10% allocation of your total capital. This will help you make sure that you're not getting into too many stocks, right? And at the same time, the programs that I've told you, the Trade Together program, um uh the um, the Trade Together program, the Advanced Technical Analysis course, all of that information is available in this tracking sheet, in this Telegram channel. Another thing, on the Trade Together program, if you go on the link shared by the ET moderator, right now we are running a 30% discount for New Year's because it's 2024. So if you want to join the Trade Together program with me, you can avail that offer. So we have a member asking for the PDF of this file. So I will be sharing the PDF of this presentation that I've made in my Telegram channel itself. So please click the link in the Telegram, and you can find the this presentation in my Telegram itself. Now, so Mr. Jalan is asking another wonderful question. What should be the minimum capital for swing trading? I recommend people to begin with at least 2 lakhs capital. See, it's a very famous quote that trading is for creating capital and investing for creating wealth. So I this is my own personal benchmark, my personal threshold, that if you have 1 crore, you should go for investing more than 1 crore. If you don't have more than 1 crore, then you should pick up the skill of swing trading or work with a research analyst and make sure they're SEBI registered to engage in high quality swing trading to increase your capital, right? Are you suggesting US stocks, currency gains as well as the stock moves? No, Sumanji, I am not suggesting US stocks. I personally trade for my own account and my family's account in US stocks, but I don't have a service launched for it. If I get around 10 people who are interested in the service, I'll be more than happy to launch it. All right. So let's see, how much time do we have? Oh, we are over time. I will still take 5 minutes and answer your questions for you. So let's minimize these. So if you have a stock where you are stuck and you need my help with respect to what the potential stop loss should be, target should be, feel free to share the name of the stock in the comment and I will take a look at it for you. So give me the stock name and your cost price so that I can do an objective analysis. In the meanwhile, I'll just quickly take a look at this alert on my system. I see Mariko. I had a long call on Mariko, but then I exited the call because you see this upside did not happen against great volumes. So, Mr. Jalan, I cannot help you with options trading, but if you want to become a great swing trader, I suggest you connect with me. I am sharing in comment my calendar link, so you can please use this calendar link and copy paste this in your browser and book a 30-minute slot so we can have a detailed discussion. You also want analysis on Apollo Hospital. So weekly time frame, Apollo Hospital is looking good. So I am bullish on the healthcare and pharma sector right now. But I do notice that this last leg of upside which is unfolding is happening against pretty poor volume. So I'm not bullish on it anymore. However, since if you have an active position, I will strongly recommend that you please use the stop loss right here at this level of 5,645, right? And I have a target already set in Apollo Tire at the level of around 59.50. So you can use that target. Bajaj Finance target. So I am quite bullish on Bajaj Finance. I think it is taking support at the 200 EMA right now, and it has good potential to go upside. I'm just waiting for some more targets, some more confirmation on this one, because you see there is a cluster of EMAs right above where the price is. So if it can sustain above 40, 74.25, then I'll be more bullish on this. But for now, I think the short-term target on Bajaj Finance is this major resistance at the level of 8,050. And on the downside, I would maintain. So I'm trying to accumulate this position, right? Like I said, if I find a stock attractive and if it has more than 5% downside, then I will reduce my average cost by using standing orders to purchase the stock. So this is what I've done. These white lines suggest that I have open buy orders there using GTT, which means when the day gets over, the orders don't get expired. They still stay in the system. Okay, so the stop loss for this would be around 6,900. So if the level of 6,900 gets breached, then I would exit Bajaj Finance. Now let's move on to another stock. We have Suman asking for YART Hospital. Again, YART. I have never seen the stock. YART Hospital. All right, it's a pretty new stock, so no wonder that I am not aware of it as such. I'm not interested in either IPOs or, stocks which are listed less than 5 years ago. Very few, like maybe Paytm, Zomato, and Nykaa. I get interested in them because even though they are new stocks, the way the trends unfold is just beautiful to watch. In fact, made a lot of money in Zomato. But other than that, I try to avoid newer stocks. So YART, I think, is closing in on a very important support at the level of 365. However, the 15-minute time frame is still looking slightly weakish. 75-minute is suggesting that a bull trend is already unfolding here, but I would wait for more confirmations before I commit capital to this. Firstly, if the stock comes down to 365, I might go in with a small buy order, not my entire allocation. So suppose I want to allocate 2% of my total capital to YART, I would allocate 25% of that when it comes to the level of 366 and wait for more confirmations to come in to buy more. However, I would also recommend that you use the stop loss at the level of 355. In case the stock goes below that and you have a holding, you should exit. Hindustan Unilever, HUL. Oh. Let's see. So I think quite a big rally has already unfolded in HUL, and the last leg of the rally has happened against quite weak volumes. Also, the stock is experiencing major resistances coming in from trend line and green zones. So I am not very bullish on the stock anymore. I was a while back, but as you can see, this green line, my target has been achieved. So I would not recommend a fresh entry. For those who have an existing position, you should definitely maintain a stop loss around here at the level of 2,617. Now, next, let's take a look at HFCL for Mr. Jaspal. I am quite bullish on the chemical sector. HFCL is one of those stocks. In fact, I've been long on HFCL for a while, so full disclosure, and I still accumulate this stock time and again. Okay, HFCL I think is also very close to my target of 98.5. So fresh entry is not recommended at this point. If you have an active position, please maintain your stop loss at the level of 81.5. How much swing traders we get in month in swing trading subscription? How many swing trades? So Yash, the swing trading subscription that I run, it's not based on the number of swing trades recommendation. It's based on the number of swing trade positions that I help you maintain. So there are 3 different plans. I would recommend that you join my Telegram channel and get more information. So depending upon how much capital you have, I might help you maintain 5, 10, or 15 active positions. If you join my Telegram channel, you will be able to see this post. In this post, I have shared how the trade recommendations have performed, the different plans, the Esteem plan, Elite plan, and the Exclusive plan have performed from March to December. You can get more information in the Telegram channel itself. Let's look at Syngene now, because I like this stock from Mr. Shivaram. Very good stock, underlying bull trend is super strong. The 75-minute time frame, the daily time frame, both are showing positive range shift and positive divergences. I can see the 15-minute has also come into a bull range, which is good news for us. Right, it came into bull range somewhere over here with this positive divergence, and it has not started to move at all. So this means that a super sweet opportunity awaits us. So we can draw a stop loss here at 675 for a very comfortable target of 815, giving you a risk to reward ratio of, on the downside, the stop loss is around 5%. On the upside, the target is 20%. So risk reward is very, very comfortable at 4 to 5 level. So Syngene looks very attractive. Now, with this, I'm going to have to wrap the session because I can see on my clock it's time for my next meeting, for which I'm actually 1 minute already late. I will see you again on Wednesday, where I am bringing a very interesting analysis for you. Last few sessions, I have talked about stocks where I made profits. This session, I'm going to talk about a stock where I missed 32% upside, which I could have captured in just 70 days, in a stock that I had entered at the bottom, but I exited too soon. Because today we've done the discussion of pitfalls, and early exit is a pitfall that even I, as an experienced trader, experience. I am going to discuss on Wednesday at 5 p.m. why that mistake happened and what I'm going to do better next time when I find myself in the similar circumstance, so that next time when such an opportunity comes, I don't miss but earn 32% profits in just 70 days. So I will see you in that session. Thank you so much for joining today and giving me your time. I will see you on my Telegram channel. Namaste.